right. So what's up, everybody? Kevin Clement here, and I have a very special interview that I'm doing with Paul Reilly, and we're just going to call Paul Reilly the local commercial and business banker, and we've got a lot of stuff that I want to go over. Paul has been in the industry for more than 12 years. Is that correct?
Yeah, that's correct.
Awesome. And the guy is absolutely all over the place, literally. And Paul, if you want to take a moment to tell the audience who you are, where you came from, why you got into business banking in the first place, and yeah, let's go with that.
Absolutely. So again, I appreciate you having me out, Kevin. Again, Paul Reilly. I'm a commercial loan officer. I'm with a community bank here in the DMV. Originally started out my career, as you mentioned, several years ago down in Richmond. Ironically, now the Richmond market is a sub-market I still deal with, even though I'm up here in Northern Virginia. Investor clients, they're looking Baltimore, they're looking Richmond, they're looking Pennsylvania. We're looking all over now. So, the nice part is everybody can pull up their computer, pull up their phone, and look at anywhere. What's happening in this market? Do I want to start a business? Do I want to invest in commercial real estate? All those great things. So, even for my clients, I have some that are probably on the highway right now fighting traffic, getting down to Richmond or coming up here to Northern Virginia on Friday.
That's right. That's right. So today I want to talk with you about startup businesses, right? And I want to talk about startup businesses who want to either lease or purchase their first commercial property for their business. So a few things that I'd like to discuss is build-out loans, SBA loans, conventional loans, and all of that stuff. And I'm just going to basically ask a few questions. I've got several questions here, really. But let me ask you this. Explain what a true banking partnership looks like for a small business owner versus just being an account number at a big bank. What is the advantage of working and having a relationship with someone like you as opposed to a big national corporate bank?
I promise I wouldn't pull out my cell phone, but normally I would pull out my cell phone and say, I have a client calling me right now, I have texts coming in. The nice part about being a local banker, my clients, they're putting together their business plans. They are looking very, very specific areas that have specific needs. They're trying to fill that need. They have a great idea. Why hasn't somebody already done it? Because no one else has thought of it, quote unquote. Mm-hmm. Or they have a twist on it that'll improve the process. Whatever it is, whether it's food service, whether it's you're renovating people's homes, across the board, there's a number of different industries that I work with. But most of the time with business owners, what makes me different is they can reach out. It's not a one-way relationship. You turn in documents somewhere, you never hear from anybody. Maybe you get a letter in the mail. That is what most people are experiencing at other institutions. They never find out the why. And I'm always upfront with my clients. I'm not always a yes man.
Right.
We are dealing with institutional capital. We are, as a bank, making a risk and investment into your business when we finance. And therefore, we want you to be successful because it's a partnership. If you're not successful, you can't repay the loan that you took out. So we never want to tell people no. But there are criteria we look at, and understanding that criteria, how to get through the gate of capital, that's the difference. I'm a gatekeeper.
Gotcha. Okay. And I guess, for every entrepreneur, for every successful entrepreneur, they've got a team, and a banker to be a member of that team is absolutely crucial, right?
It's crucial. And the bulk of my clients are 20 million in revenue and under. Startup all the way up to 20 million in revenue. That's my sweet spot. And obviously different markets, that means different things. 20 million revenue in Richmond is a very different number than it is in Northern Virginia. So let me just preface that. But my clients in that range typically don't have their own C-suite. They maybe have a manager if you're on the higher end of that range, but oftentimes it's family-run businesses. Maybe you're a manager who purchased the business and now you're the owner. I'm part of that C-suite. Your CPA, your realtor, your insurance provider, your attorney, all those people should be in the room when you're making decisions. And again, that's a big difference. I go out to my clients. I'm not saying come to my office. The attorney's not going to come there. The CPA is not going to come there. Let's go meet at your attorney's office. Let's get everybody together. You can ask us all questions, because what I do on the banking side is impacted by your legal team, your accounting team. And if you don't have those players, if you don't have me in the room as well, you don't know how those pieces are interacting with your business.
Right. So let me ask you this, for every entrepreneur who should have a banker on their team, how important is the relationship between the banker and the entrepreneur's accountant or CPA?
It's critical. I always like to say, especially for people who are in the startup phase, which is what we're talking about, there's so many moving parts. And as a bank, how do you say yes or no to someone? You pin people down. You figure out what are the parts that are moving less. Let's start there. And then you extrapolate. We're going to dive into it, but especially for entrepreneurs that are just starting out, projection-based lending, it's all theoretical. How do we quantify that? And we'll talk about some ways of what we do, but understanding what your history has been. Even if you weren't an entrepreneur, but you were W-2, you were a manager, you're going to have your taxes filed. Whether it's conventional, SBA, there are some lenders out there, and if we want, we can dive into that, who might not care as much about that, but they're going to charge you accordingly. And most people would prefer to be paying me or the SBA compared to those other lenders.
Gotcha. So, I guess the next question would be, for the startup entrepreneur who is looking to lease or purchase their first commercial property, what are some of the loan programs and some of the products that you guys offer to be able to assist?
There are two big categories, and I'm going to talk about some other means, and what I like to call, if you have assets, you have options. But the normal course of business, someone walks in, hey, I need a loan, for whether it's for a business or for real estate. I have to figure out which that is first. Leasing is a different process than commercial real estate. And the main reason why, for the bulk of business owners who are starting a new business, they don't have assets that are necessarily tangible, especially in today's service-based economy. You're starting a marketing firm. You're going out on your own, and you want to offer a hospitality concept, restaurant, any of the above. Desks, chairs, they're a depreciable asset that typically doesn't hold value long term. Just like when you go buy your personal car, the minute you drive that off the lot, it's depreciated. You've already lost money. It's the same thing when buying tables, light fixtures. Real estate is different. If you're buying real estate, it's a tangible asset that can fluctuate in value, but typically holds value. So I do want to break these up because they are nuanced. If you are looking to start out leasing, your options are SBA and conventional. If you're looking to do real estate, your options are SBA and conventional. But how those two programs are applied are very different.
Okay.
And I can go more into it. Diving into the leasing side, the biggest part is term. If you are a startup, the normal term length, which is going to determine your monthly payment, what the interest rate is 10 years. Both SBA and conventional. That's 10 is the max. Now we're going to look at how long is your lease. And again, why you might want to have your commercial realtor in the room before talking to the bank. Can you get a 10-year lease? For a startup, that's sometimes harder. That you don't have the credit, landlords, and feel free to chime in, Kevin, but they're looking at your financials already.
No, 100%. 100%. And it is such a challenge for a startup to get a lease, especially if you're competing with big corporate backed companies. Like if you're a new restaurant, let's just say you have a Mexican food concept, you're going to be competing with the Chipotles, with the Baja Freshes. So why should a landlord pick you and your concept over, and why should they take you as opposed to waiting for another concept like Chipotle, Baja Fresh, or whatever franchise is out there?
And I don't want to speak for you, but I feel like the biggest advantage I have seen, not as the realtor, but as the banker for small business, is if you can move quickly, if you can get all your documents, you have financing already set up before you go to that landlord, you're going to move quicker than potentially those other large corporate entities. That is your advantage. You may not have the financial strength that they have yet, but if you can come to them with a full package, one, they know you're not window shopping, you're serious, you did the homework, you're already working with a banker. That alone, oftentimes from my experience, them saying, hey, this is my banker, I'm copying him on the email, they know you're serious. You're not window shopping. Landlords are just like you. They don't want to have their time wasted. So doing some early work, and again, talking to a local banker, even before you know where you're going to start out, is critical. Because there's some homework I can give. Whether it's conventional or SBA, we're going to want a business plan. There's an SBA template I send all my clients. It's on their website, but I just send it over. It's a template to help you organize your thoughts. I can't tell you how many people are just throwing AI, make me a business plan. They come to me and I look and I said, hey, aren't you opening in Virginia? All the data's from Maryland. What happened here?
Right.
And it's AI. I mean, and AI is a great tool, but it needs a reviewer. It needs someone to check its homework.
Absolutely, and you got to know how to prompt into AI to get the result that you're looking for, right? And that's one of the main things. And that business plan and creating that brand, that logo, and coming up with that business plan, having the menu already established, it just shows that you've got your stuff together. I guess my next question would be, okay, for startups, where do you see startups pulling funds from the most, right? Is it from their home? Is it from relatives? And if they aren't pulling funds from somewhere, is there options for like 100% financing and stuff like that? So,
I never like to promise 100% financing.
100%.
You know I'd rather under-promise and over-deliver. But, sales 101. However, I am seeing, especially in today's market, where things are a little more competitive. There's frankly some closures happening, some default rates going up in certain sectors. People are pulling capital from everywhere, whether it's a home equity line you've built. Again, if you have an asset, you have an option. If there is equity in that home, you can pull those funds from it. There are some advantages when playing with SBA to do so. It'll help extend out your cash flow. Right before you quit your 9-to-5 job, again, talk to the banker before you make a big life decision. Talk to the commercial realtor, talk to the attorney, talk to the CPA. What from a tax perspective might this do? But getting a home equity line set up before you quit your 9-to-5 job is critical. Once you quit, you have now lost that income history.
Right.
And now we have a startup, it's not going to go well. It never does. So talk to the banker first before making that big life decision. The other area I see a lot of employers in this area, they have stock option programs. People have, whether it's qualified, such as 401k, IRA, or non-qualified. You got a stock option, you own the stock outright. Maybe you have invested in mutual funds with your financial advisor, another person who should be in the room. How will this new business impact your retirement? Critical for long term. So taking those stocks, putting them in there, and using that as your equity injection. Because again, it rarely, especially for a startup, is there 100%. We want you to have skin in the game.
100%, yep.
The other big thing, and it's a common idea that I have found most business owners haven't thought of, there's a program, and I would Google it, it's the ROBS program. It's from my layman's understanding, it is a part of the tax code similar to a self-directed IRA, where you can invest in a passive. You can use that ROBS program to invest in a active for-profit entity that you created. It's not designed for passive like investment. It's designed for rolling over your 401k, your IRA, those qualified funds, potentially into your business. And it's very common, regardless of whether it's conventional or SBA. And for a lot of my clients, that is an asset that they normally think they can't tap. Oh, well, I'll get penalized. Oh, it'll increase my taxes for that year as income. We're all afraid of those IRAs and 401ks, but there are processes to leverage that when you are starting a new business. And some of my clients don't even need a loan when they do that. They have enough built up from a previous employer. They could bring cash to the table, get past the startup phase, which is the old catch-22. How do you get funding without having the history? How do you get history without having the funding? It is a huge game changer for individuals. And there are organizations out there that will help manage that Rob's process for you. The final area, friends and family.
Friends and family.
People don't like it. Nobody likes it. But sometimes that is a conversation. And it's not always just the equity injection side, the money. If you have a new concept, especially for SBA lending, we require what's called a resume management form. We do a very similar analysis on the conventional side. But we're going to look at what's your history. Why are you qualified to start this venture? Do you have the required certifications if there's anything medical involved? Engineering. You're starting an accounting firm. Are you a CPA? Do you have other credentials that would allow you to? But you don't always have to be a CPA to be an accountant. We look at that. If you're lacking that, that's an opportunity to go partner with a family member, with a friend. The question is, will you as partners be a good fit?
That's
and
right.
That should come out in your business plan.
100%. And not only in your business plan, but you should sit down if you are bringing partners and you are bringing family members or whatever into the table as a partnership. I strongly recommend going and speaking to a business attorney, going over the concept or whatever business that you're starting with, and coming up with a
Operating agreement.
Operating agreement. Thank you so much, Paul. Yes, and the operating agreement from there will there will be accountability there, and you'll know right then and there, and you should know right out the gate in that operating agreement whether or not this partner is a good partner for you or not. Would you agree with that?
100%, and not just to understand what your responsibilities are, what your partner's responsibilities are. On the banking side, we will require it for your loan. SBA will require it. Conventional will require it. We have to know who has permission to even take out money.
Right.
If it's not laid out, we can't do our loan. And again, AI is a great tool, but you need a reviewer. That is always what I say. And maybe you use AI to figure out what's important to you, what you want in that operating agreement with your partner, but then take all that information, bring it to an attorney. I always recommend take the time up front to plan. Otherwise, it's just like dissolving a marriage. It's going to get messy. People are going to wish they did things differently. In the country, divorce rates are on the rise.
Yes.
Partnerships has been like that forever, though.
It's been like that forever. So there should always be some sort of exit strategy for the partner in the agreement before you go into, so you know what's going to happen if somebody doesn't pull their weight, if somebody leaves, if somebody walks away, or whatever.
It is an insurance, but in my mind, personally, having an attorney review something gives me peace of mind. That's a type of insurance.
100%.
Being able to sleep at night knowing, hey, I did all I could. Something may still happen that we didn't think of, but I took the time. I invested in my business, and maybe I didn't get a new laptop out of it.
Right.
But you invested in the future of your company, and that's an intangible asset.
Right.
You're not going to keep the laptop for 10 years. Hopefully, you're keeping your company for 20 plus.
Right.
So.
Right. So, I know you don't like to overpromise, but let's go back to the 100% financing. What industries do you see where someone would have a higher probability of being able to get that 100% financing as opposed to other industries?
So first off, it's there are possibilities with SBA, however, not for startups.
Okay.
First off, unless, and there's always a caveat, and again, that's why we're having this conversation. There's a caveat. The owner's willing to put some skin in the game for you. So if the owner if someone believes in you as much as you do, and let's say you're buying real estate or you're doing some leasing, you can set up a seller's note on the back end. SBA will allow you to do so, but you cannot make any payments towards that loan until your SBA is paid off. That was a change. They've changed some of that recently. And I say recent. In banking, recent is the last 5 years.
Right. Right.
But it wasn't yesterday. But there are changes. The other thing that you can do, especially on the real estate side, again, maybe it's not from the landlord, but maybe you have a family member on the conventional side, not SBA, that's willing to provide other financing.
Okay.
The final piece you asked, what industries? We're looking at default rates, especially SBA. It's all public. The SBA provides what are the default rates for this industry. And if you don't know what your industry is, take a look at your tax return. There's a line on your business tax return, NACIS code. That means something. People don't know what they just think, oh, it's numbers, it's gobbledygook. If you there's a NACIS code website the government runs, you put that number in, it will tell you what industry you are, even if you think you're in something else. It's on the tax return, and it impacts SBA. There, especially with the Made in America program, manufacturing, that's a huge area because you can get more dollars now for being a manufacturing NACIS code industry. However, I can't tell you how many clients say, oh, well, that's me. That's not what their NACIS code says. So again, talk to the accountant. If it's incorrect, get that corrected. Or put that in your business plan. How am I going to get financing? Let's talk to the banker.
Okay, let's back up a bit because you had mentioned something that kind of caught my attention, and I just want to make sure that the audience is clear. You had mentioned something about an owner who believes in your business and being able to finance the down payment. So that would be owner financing, correct?
Private money.
Private money, and that would be what the landlord.
It could be. Very rarely do I see it in leasing, to be perfectly honest. Now you will get TI.
Okay.
It's kind of the same thing. It's just a different name. How it's treated by SBA, again, there are specific procedures when you are getting TI for SBA lending and you're doing build out. But negotiating with a landlord is critical. That's why you bring in an expert. Like you,
right.
I mean, that's the entire reason.
Right.
I would say 85% of my clients, most of the transactions we're doing, it is their first time doing something.
Okay.
Starting a business, buying real estate, signing a lease. Just like you wouldn't necessarily go buy your own home if you don't have a background in that. Why are you doing that with a business? To save a couple dollars? If that breaks your business plan, it's not a good business to go into.
100%. Can you give an example of give an example of somebody that you've worked with in the past that you were able to get financed, but they also use the landlord, or not? Let's just not say landlord, but let's say the seller, right? Mm-hmm. Can you give us some examples that you've seen in the past on how somebody used the landlord to be able to fund and privately finance the down payment?
Sure. So I had a doctor, had a couple of years under their belt, out of med school, had worked for another company, hated the company, was overworked, underpaid, and frankly, with how W-2s are taxed compared to their potential earnings starting the business, from their analysis from their accountant, they felt it was far better for them to go into their own business. Even as a startup, taking that risk on, they wanted to purchase their office space. Office prices have come down quite a bit of late, especially in the metro. It's not across the board, but in the metro, it's reasonable to say that. And they wanted to purchase their office, so they knew their client base they spend the next 10 years developing can't be pulled out from under them. If rents go up, they get priced out. The landlord and them have a disagreement. They wanted to be their own boss of that purchase. So originally they had looked at leasing, but through programs. For professionals is typically the term we use in banking. Accountants, doctors, people with licenses, that frankly there are barriers to entry, and there is a lot of education up front. Education's powerful. The same reason why we're willing to do a startup loan using projections and a business plan is the same reason you have put thought into it. Education shows you put thought into your career. You've completed something. That's what's pushing us to do 100% financing. And again, credit is looked at for that. Those programs, if what I call hair on the deal, somebody smudged something to make it through, that doesn't work with 100%. But it can occur. And the owner in this case for the real estate, which a lot of banks will require, we prefer 10%. Even with medical, It doesn't mean we can't do 100%, but we prefer, with how new this doctor was, the owner felt, hey, this is a doctor, I want to exit, I'll hold 10% back as a note. The bank financed 90%. Now, we had to know about that. In that case, the bank looked at what are the terms of your note. Again, the realtor didn't just draw up, hey, this is the purchase contract. The realtor also got involved in helping negotiate the terms of that loan with the private seller. The private seller, the landlord, that wasn't their business. They didn't really care what the terms were, so they actually got better financing terms than they probably would have through a normal institution. The landlord just wanted his money and out, and wanted the doctor to be successful. He didn't want to have to have 10% on the line, so he wanted to work with the client. That's a partnership, even if it's not a legal partnership. Two people saw eye to eye, they got along, they got a deal done.
That's right. That's right. Yeah. So it's very important to make friends and be able to influence others, right? Let me ask you this: for somebody who is thinking about purchasing their first commercial property, and they're looking at it as a means of investment, because I just met up with somebody who called me, we sat in the office and we talked for about a half hour. We looked at several different properties, and I was just trying to give them an idea of what's available,
Yep.
what's out there, just kind of wanting to give him a quick education, and now he's going home, he's going to do his research, and then of course he's going to come back. But what do you offer to somebody who wants to purchase their first commercial property, and how should they prepare for that?
So I will tell you, the path of least resistance is don't be a startup.
Okay.
And part of that reason is, with real estate, it's a larger loan size.
Okay.
A larger loan means more risk, more money on the line. A larger loan means you're expected to typically put more money in. You're expected to have a stronger work resume, a stronger bench. We also typically want to see, hey, with this larger loan amount, you've done this before. It doesn't have to. And again, with the SBA, it's not required. We can do projection-based lending. And then again, the real estate is an asset we can utilize. But there's still more risk. So does your business plan, your resume, all of the pieces fit to support that this is going to be a successful venture? However, one thing that's very common is everybody wants to buy their real estate right away. I've never met a business owner, frankly, maybe one, who didn't have dreams of opening multiple locations, who didn't dream of hitting it big, buying their real estate someday. What oftentimes I will see is, even when you're just leasing to start out, let me dip my toe in, let me show this concept works. I have seen where there are options to buy in a lease contract at a certain negotiated price, and you want to be specific. Purchase an option to buy at future market rent rates. What does that mean? Who's going to decide what that rent rate is? Who's going to decide what that valuation is? Be specific. And that's where a great commercial realtor can come in and say, hey, we couldn't get you qualified for purchase. We didn't have enough money, or you didn't want to put in enough of your own capital. It's not always someone doesn't have the money. Sometimes you just personally, with your familial obligations, don't want to put that money in. So conserve that starting up. Let the business generate that future down payment over 10 years, and then have the option to buy at the end of that 10 years. Worst case, you say, hey, it didn't happen, but I'm not out any more money. I don't owe the bank more. I'm not stressed about that. You have an option to buy at a predetermined rate that you were okay with, a predetermined price.
Okay, so excellent. What would you say is there an asset class for real estate out there that is easier for somebody to finance over another, for example?
Raw land is always at a disadvantage.
And why is that?
I love raw land. I find that's raw land.
Yes.
But raw land is more speculative.
Absolutely.
There are things you can do with raw land. I'm seeing a lot of solar farms popping up. I'm seeing a lot of, someone's converting raw land into industrial space because there's such a lack of industrial. My quick overview of the big sectors: office. There's availability. If you're looking to lease, you're looking to buy, you have more power in those negotiations as a buyer or a tenant than probably you've ever had, at least in the DMV. Industrial, it's a very tight supply. Data centers are a part of that, but also so much, there's been so much development residential. We need more housing. We always talk about people who are in your home, they need places to park their trucks. The group that work on those trucks, the auto mechanics, the people who work on your car, they need industrial space. Counties aren't zoning for that. They want high density retail and residential. So at least in the DMV, more of that industrial space. You have to go out to Winchester. You have to go out to Baltimore. You have to go down to Spotsylvania, and therefore, people are getting priced out, or it doesn't work with their business model. Another area, multifamily right now, it's varying. One, there's not a lot of supply of multifamily on the Virginia side.
Right.
DC, there's a lot of new construction.
Yep.
However, even recently, appraisals are varying in that market. There's a lot of change. There's also office. Again, a lot of volume. More is coming online in the residential perspective because of office to residential conversions. So that's having an impact down the line in multifamily. I don't think we've felt that yet in the DMV. But as an investor, potentially in multifamily, it's something you want to look at. How many new units are coming online? You always want your demand to be higher than your supply if you're an owner.
Right.
It's the opposite if you're a tenant. The other asset class I would say that's performing very well, and again, you can't find it, whether you're trying to lease or you're trying to buy, retail. Occupancy rates are very low. Cap rates, if you're looking to purchase, are very low also. And people want to hold on to those assets. A lot of people have left office, in summary. Some have started leaving multifamily. Or they're waiting to buy at a better price that might be coming. Talk to your financial advisor.
Okay.
Where are these going? That's
right.
not my job.
Are you guys even financing office?
We are financing. Actually, one of the most common deals I do lately, someone who's a doctor, a commercial realtor who is leasing space, they're now buying their space. They know the value of that space, and not everyone needs the large office, whole buildings. I'm definitely seeing with lease renewals and purchases smaller space being taken, but they're more intentional of what they're using that for. It's no longer, I just need a bunch of cubicles and a place to have my head down. It's right. People want areas like this where you can do a podcast. People want meeting rooms to entertain clients. They want a kitchenette so they can host events. But the most common transaction I'm seeing that's actually going through office purchase because someone was leasing before. And doctors, accountants, lawyers, they're all buying. And they are getting reasonable purchase terms.
Okay. So I guess, because I kind of hear, we know that the office buildings are struggling right now. And I had a colleague tell me that an office building sold in Baltimore for $50 a square foot.
Absolutely.
And it was 30% occupied. And I was like, wow. And I said, doesn't office normally, isn't it like $250 a square foot? And he said, yes, it is. And this is the second building that I've seen within a month sell for so low. So that was the reason. That's the reason why I'd asked if banks are still even financing office buildings anymore. But is it easier to purchase an office condominium, right, as opposed to an office building?
So I want to preface.
Okay.
I am not financing office buildings.
Okay.
So that, frankly, what has happened in that market does impact me, but not as directly as some other financiers. Again, I preface at the beginning of the show, $20 million in revenue and under. Um, Office condos is where I am seeing that. There are some large corporations who are buying entire buildings, but probably years ago they would have leased 3.
Okay.
So you are absolutely correct. Office buildings are struggling, and this is less from personal experience, but I do a lot of networking. I go to different conferences. There's a number of great commercial organizations that provide education, which I like to go to. It's a tale of two cities. From my understanding, Class A, fresh product, is more desirable. That is doing relatively stable. Even from my understanding, some market rate increases on rents have occurred. Now, there's been a lot of expense to modify how those layouts are. In some cases, again, more community space. Bring people back to the office so they want to come in. That is different than what I would consider Class B, and below. Office space that's maybe outdated. The property manager hasn't had their thumb on the market as much, or frankly wasn't paid to. You get what you pay for sometimes as a landlord. That is suffering, and that's where I'm seeing the huge vacancies. Class A, if it's a desirable area, it's not doing amazing.
Right.
It's underperforming where we would have said pre-COVID, but you're not seeing those have as much of a struggle to lease up, because those tenants who want to be in that space can get there if they want to, typically, and that's where they're going, and they're leaving B and below behind. Now, smaller tenants like I'm working with, startups we were talking about, there is some leasing still occurring in the office space. That's where I'm seeing more often than not people want to buy after 1 or 2 years in business. People, whether it's right or wrong, people talk about, are we at the dip yet? I'm not telling people, talk to your financial advisor. The people are buying. That's where the bulk of my office business has been. But industrial, it is sluggish, and my clients are putting in multiple bids typically. Just like how residential, we'd hear about that. Oh, you have to put in 50 offers. Sight unseen, but that's what industrial, that's what retail looks like. Office is a different story. Land is a different story. And of late, that's how multifamily's been as well.
Right. Okay. Excuse me. All right. So what would we had discussed, one of the things that I remember calling you about is, and this was a question that I had asked you last week, was what, if somebody was looking to invest in a property and kind of get creative, like what asset class should they be looking at, right? And you had mentioned the industrial lot, and that you're seeing people buying industrial land and that's semi-parking, the rent.
Everything from parking trucks on, and again, you gotta be careful with zoning and environmental with industrial.
Okay. Yep.
That's a key. Understanding what a phase 1 in the industrial space is critical. If you don't know what that is, Google AI phase 1. The other thing I'm seeing is a lot of easy to build steel structures going up on these, flex space. Maybe there's a little bit of office built in, but a lot of my clients aren't even putting office in. They just want a covered area. They don't even necessarily want AC. Sometimes they do, but they need a place to work on trucks that's covered, a place for storage. That's what I'm seeing occur. I am also seeing, as I mentioned earlier, obviously there's a data center lottery game going on in some parts of the states, country. I don't get involved in the data center space. It's not my space. I don't want to play in it. I have clients that service them. There's a lot of jobs that aren't necessarily that are servicing these data centers, so I have clients involved with that. But I'm not tackling directly these large tech companies buying.
No, 100%. One of the things that I'm just wondering with the whole data center, I don't know if you had heard, but Elon Musk had mentioned that he is wanting to take these data centers and actually build them in space, right?
I've seen the same news articles.
Yeah, you've seen the same. Like what's going to happen to all this land that they've been putting all of these data centers when that happens, and what are they going to do with all of these huge buildings? You know what I mean?
So, and again, this is me getting hypothetical. This is not my bread and butter. I've seen the same news articles, whether they're right or wrong. I've also seen articles that say we're putting them in the ocean. Part of the issue is there is no surplus data center. With the rise of AI and other, like the cloud, all of these other services that you can't physically touch, but are growing in demand in usage and adaptation, or adoption, I should say. Could it occur? Sure. That's a long-term investment. That's like saying, oh, is the iPhone going to be the next big thing back in the 80s?
Right.
Who knows? The technology, whether it's there or not, there are smarter people, engineers, smarter people than I. SpaceX has been to IPO. Even the news, and whether it's right or wrong, I don't know. You can look. And what I'll qualify today is Friday. What is it? June 26th. So I'm going to quantify this. Supposedly they're doing a bond offering. They're having a hard time placing it. I saw this morning for SpaceX. But whether the science or not, from my understanding, makes sense, I can't comment on. However, I see there being more of a demand. I don't see technology decreasing in its capabilities.
No.
Now, maybe our chips that we're using need less energy. And so therefore we can do more with this existing data center space with less, just like how server rooms used to take up a whole building. Now it's all online. And again, those processing chips are getting smaller and smaller. The computers, having a cell phone, same idea. It's getting smaller. We're able to do more with less. Same token, there's demand. I mean, there just is. And there's so much demand. Again, one of the things that gets talked about at these education events I go to that sometimes are centered on data centers, are we going to put nuclear reactors in our national forests and allow these data centers to hook up to them directly, so we're not draining the grid, impacting consumers' prices? There's a government aspect to this. There's planning that may or may not go into it. A lot is changing. So how you're going to invest in technology, talk to your financial advisor. However, there is not supply currently. That's what I can say. As of June 26, 2026, there's not supply.
Wow. Okay. Just real quick, what so if somebody, is looking to either purchase or lease property, what are the advantages and disadvantages, and why should somebody look at SBA, and why should somebody look at conventional financing? And for those in the audience who are wondering about the two, just like SBA is a government-backed loan, like a VA loan is, an FHA loan is for residential real estate. SBA is, of course, a government-backed product that is used to purchase commercial real estate. But what are some of the benefits, and why should people, be looking? Who are the people that should be looking at SBA, and who are the people that should be looking at conventional?
To be a little cheeky, as a business owner, you should look at all of your options. Okay. And that's, again, that is what I do. Mm-hmm. My typical process, we have an initial call. We chat, we grab coffee. Tell me about, just in general, what you're looking to do. Once you tell me that, now it's time to, again, try and solidify as much as we can. We're never going to be able to cross everything off, but early on, send me your taxes, send me your business plan, send me your projections. If you don't have those, I can refer you to great people. Kevin can refer you to great people who can assist with that. Frankly, our tax dollars pay for people who help with that. And a lot of people don't know about those resources. Once we've done that, hey, here's the business plan. Using the term SBA is kind of like saying getting a loan. There are so many programs within SBA. Sometimes you need a working capital line. Maybe, frankly, based on your financial model, your money, your assets you have, you don't need money to build out your space, but you want a working capital line to bring on employees. That is a different SBA product than what's typically the 7A. The 7A is used specifically, you can use it to buy real estate, but it's overly used when you're leasing because it's more favorable to non-fixed asset type investments, whether it can be working capital to start out, it can include light fixtures, desks, your laptop. You have to be able to track where the money went. SBA is big on where the dollars go. We're not going to trust you're going to do it. Show me the receipts. So that's the 7A product. Rates all vary. There are fees associated with SBA. Sometimes they're waived. There are constraints with SBA. And rates do matter, but you can factor that into a business plan. Your business plan should adjust when you figure out what your financing is. Everything should adjust when you figure out what your cost of capital is. What I normally say is, how much flexibility do you want? I feel it's safe to say SBA is less flexible than conventional. So it's a different mindset. Everybody cares about rate. Do you want flexibility? SBA is going to tell you and be more exact with how you spend your dollars than conventional. Than if you do, let's say, a home equity line. I mentioned earlier to you, Kevin, I have a barber right now in a part of the country. They don't want me to tell them how to spend their dollars that I give them. So they are leveraging another asset that they have personally. They're doing a line of credit, and they're going to use that so that way they can just pay cash for the renovation. It's a refresh on their location. Do you want me telling you, the bank or the SBA telling you how to use your dollars? That's as valid as a question of whether you want 7 or 8% as your rate. I will say the range right now, June 26, 2026. Don't quote me tomorrow. I'm seeing everything on the conventional side, non-real estate, 7s and 8s.
Okay.
SBA's 9s and 10s.
Yep.
9 3/4 on the high side typically. SBA is prime plus. Conventional can have a fixed option. How much flexibility do you want? SBA can also have fixed options. There's another program for real estate that's called the 504, and we don't have enough time in this podcast to go granular, but 504 is a lower rate than the 7A. So if you're looking at real estate, I'm always going to see, can we get you through the 504 over the 7A first? But again, we meet, talk to the client, let me look at the data, let me see what you've got, and here are your options. Here's the good, the bad of each. That's my goal. And that's, again, coming back to why a local lender, why not just put AI Paul Reilly online? You just type in your data, say, give me a loan. I'll upload everything. Feedback. That's the local banking sweet spot. I can give feedback. Hey, you forgot to sign this document. Hey, you didn't understand this document based on what I'm reading. Or, hey, the data you pulled is from Maryland, but you're starting in Virginia. Why don't we go back and take a look? You can't get that through an automated process. AI will keep running with it currently. It might get better. Mm-hmm. An online drop system going through an online lender, not all, but you're going to get kicked out, and you're not going to know why. Oh, if I just signed this document or re-signed it, maybe a time frame expired when that document was valid. Sorry, rejection. Bye. Whereas I can give that feedback.
Excellent. Anything that we haven't discussed today that you'd like to close out with?
I'm going to reiterate. We talked about it. I don't want to bring up a new topic because we've talked about so much, but every business owner should have a board of advisors. It's not going to look like, the TV shows where you're all sitting around a desk. Maybe you're meeting at a Panera.
Right.
Get them in the room. And it's not just your financial advisors. It's, maybe you need to have a general contractor on your team. What are the critical components that without that knowledge, your business doesn't run? That should be a part of your business plan. Everyone says banker, CPA, commercial realtor, financial advisor, general contractor. Maybe it's your insurance provider. Maybe you're in an industry where insurance is a bigger cost of your business model. It's harder to get insurance or there's more claims. They should be on your team. find the right person to partner with. They're making money, and they want you to be successful, just like we as a bank, just like you as a commercial realtor. We want to do more with you and see your business grow. You grow, and our businesses grow as a community.
Sounds good. And if somebody in the audience has a question for Paul Reilly, how do they get in touch with you?
It's very easy. You can find me on LinkedIn, but I'll put my number out there. It's everywhere. I have a Hampton area code, 757-532-2629. You can text, call, leave a voicemail. Like everybody nowadays, we get a ton of spam. Text me is a great way to get through that. Or better yet, talk to your buddy Kevin.
Sounds good. And guys, if you're watching, thank you so much for taking time. If you have any questions that we haven't gone over, or if there's anything that we can do for you, feel free to shoot us a direct message. I'm going to have all of my contact information down in the bottom in the description of the video. If you found any value in this video, give me a thumbs up, a like. I greatly appreciate it. And that's all we have for now. But until next time, we will see you soon. Thank you, Paul.
Absolutely.
Excellent.
Get out of your way. That worked great.
You like that?